markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got an hour and 13 minutes to go until we wrap up a tumultuous trading week. Volatility continues to dominate U.S. financial markets on this Jobs Friday. Stocks are declining, with the latest data cementing expectations the Fed will remain on its rate hike path to combat stubbornly high inflation. At the end of a week that has been marked by fickle trading, quick reversals, and heightened anxiety, the S&P 500 is on track to its lowest level in about a year. S&P right now down 55 points, down 1.3%, bringing the year-to-date loss to 14.1%. The Dow down 382, down 1.2%. Nasdaq down 233, a drop of 1.9%. 10-year yield 3.11%. Spot gold up $5 the ounce now to $18.82, up 0.3. And West Texas Intermediate crude up 1.5%, 109.87 a barrel on WTI. Recapping, stocks lower with the S&P down 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We just mentioned the Cynthia Kuhn story that is in Bloomberg Business Week magazine about the abortion pill. Well, we want to get to another story that's in the new issue of Business Week, which is out on newsstands, online, and of course always on the Bloomberg terminal. You know, we've been following, and Charlie's been talking about shares of Zillow, which are tumbling today, stock hitting a 2-year low after putting out a disappointing outlook. We've got a great story that's in the magazine that actually looks at the CEO of Zillow.
We're talking about the CEO, Rich Barton. Patrick Clark is real estate reporter for Bloomberg News. He's with us now in the Bloomberg Interactive Broker Studio. Pat's story featured in the new issue of Bloomberg Business Week magazine. It is available on newsstands on the Bloomberg and at Bloomberg.com/businessweek. Also joining us is Joel Weber, the editor of Bloomberg Business Week. He is joining us on the Access line right now. Joel, I want to go to you first. BHAG. Explain what BHAG is. I'd never heard of it before reading Rich's story.
Yeah, BHAG is certainly one place we could start, and I think I'll get there with Pat's help. But, you know, to back up a second, you know, Zillow was and has been an app and website that people have been obsessed with on the real estate front for years. What made the company especially interesting within the last couple of years was this effort to get into house flipping. And so Zillow, looking for growth, sort of became the intermediary that was hoping to actually did actually buy houses, and then you would actually buy a house from Zillow. And as Pat basically broke these stories about Zillow's algorithm starting to go off the rails. And that started sort of happening last year. And so this story is sort of the culmination of a lot of Pat's reporting, and he got to spend some exclusive time with the CEO and talk to him about those efforts. And what the heck is a BHAG, Pat?
It's a big, hairy, audacious goal.
Obviously.
Wait, what?
It's a moonshot. It's a a big swing.
Those are things we hear about though, like moonshots, or that's like common in the vernacular.
BHAG is like early '90s formulation from Jim Collins, who's sort of management guru, built good to great and built to last, and you don't, at some point, so Rich Barton, the CEO of Zillow, likes the phrase BHAG, where others say moonshot. He says BHAG very often. And at some point, I did check the terminal to see how many other quarterly earnings calls BHAG has come up, or big, hairy, audacious, and it's very, very seldom. It's basically.
Oh, I heard it just the other. No, I didn't. Well, what does it mean in terms of how he runs this company and how he thinks about taking risks and when it pays off and when it doesn't?
The way I think about it is it's a way that he sort of marshals his employees to pursue something ambitious. And in this case, it was transforming Zillow from a company that basically sold ads to real estate agents to a company that bought houses and tried to capture sort of a spread on the flip of each house, and then thought it could attach all these other revenue streams to that. And it's not a small effort, right? I mean, there's you have to know what home prices are going to be now, what they are in 3 months from now, which nobody knows. You've got to manage portfolio risk like you're a hedge fund, and you've got to manage a contractor network who's actually going in and pulling up old carpet in and putting up paint.
All stuff that Zillow hadn't done. Go ahead, Joel.
Yeah, so this was Zillow Offers, right? And it was, Pat, where was it most successful, and what went wrong, and how did when it went wrong, how did Rich feel about it all?
Well, everybody loved that. Well, not everybody loved this. What I should say is it was successful. I mean, it found a consumer audience. People wanted to pay Zillow for this service. Now, one of the reasons people wanted to pay Zillow is Zillow was sort of giving it away, right? I mean, Zillow was buying homes at some point in the second half of last year for, on average, $20,000. It found a consumer audience. People wanted to pay Zillow for this service. Now, one of the reasons people wanted to pay Zillow is Zillow was sort of giving it away, right? I mean, Zillow was buying homes at some point in the second half of last year for, on average, $20,000 or more than it could eventually sell the homes for. So Zillow would, you'd go on Zillow.com, you'd say, make me an offer on my house. They would offer you something. You would say, well, that looks like $30,000 more than I could sell it for right now. And that's awesome. Let's do it. And so they were successful in buying a lot of houses, and they, in a long-term sense, they thought they needed to buy a lot of houses to get the scale to make this business work. As Zillow started to realize, and as Barton started to realize what had gone down, which is that they had, overpaid by $400 million or so for 10,000 houses or 20,000 houses. He said, well, hold on, maybe this isn't, the key to transforming my business into a much bigger company and solving consumer problems. Maybe I'm about to blow up. And he thought about it, and he said, maybe it'd be better not to do this.
How's BHAG going?
Well, the thing with a BHAG is you got to be willing to pull the plug on it sometimes.
So
and, you take a big swing, and sometimes you miss, and you try to move on from it. And, what Rich has done, what Zillow has done is, they sort of took their medicine the end of last year, and they came back out with a new BHAG, because that's what...
Well, let's talk about that, because I'm wondering
Right.
where Zillow goes from here. You write about the destruction and the value of Zillow, at least on the public markets. It's down more than 80% from highs back in February of last year. What's next for the company? How's it trying to turn itself around?
Well, so at the end of the day, they want to do more than just sell ads to real estate agents. That's a limited business. They need a bigger business, okay? And so what they decided was... they're still going to do some of that. They're going to change their revenue model around it. They want to be a mortgage lender. There are these new kinds of mortgage products, basically new kind of bridge loan, to help you make a cash offer on a house so you don't get beat out by an investor or somebody who's got stock options or family money to buy a house with. And so they're going to do all of that. And the way they've organized it, they say they're going to have they call it a super app for housing, and go on your phone and manage the whole transaction. And so they came out and said, well, we're going to double our revenue, we're going to increase our conversion rates, and so forth and so on. So it's the new BHAG. It's not as tangible as we're going to transform the company and buy and sell 5,000 houses a month.
Right.
It's a little harder to kind of get your head around, but nonetheless, they've set a new target for themselves.
Okay, Pat, last thought. Can you tell us about the moat?
I've just got about 30, 40 seconds.
Sure. There's in Rich's office on the 40th floor of a tower in downtown Seattle. When you walk in through the front sort of door of the office, there's a moat, a pool of water that you cross over. And Rich told me, he was a little bit sheepishly. He was like, well, somebody told me once that crossing water makes people feel like they're leaving their troubles behind them. And I was designing my office at the time, and so I decided to put this here.
We need one for the studio, Carol.
We do have a fish pond when you walk in. It's not exactly a moat here at Bloomberg, but...
Kind of the same theory.
It does make me feel
It
like
is
I
kind of
leave
the
my
same
troubles
theory.
behind when I enter work.
Oh, man, BHAG. I'm going to start using that around here. What do you think?
Sure, go ahead.
Our next management meeting, I've got an idea. Let's see how
Stand up
that
and say
goes.
that to everyone.
Yeah, I want to see how that goes. Such fun and such great reporting. Patrick Clark, real estate reporter at Bloomberg News, here in studio. Joe Weber, editor of Bloomberg Business Week on the Access Line in Brooklyn. Check out this story. It is in the new issue of the magazine online on the Bloomberg. You're listening to Bloomberg Radio.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, but 60 minutes left in your trading session, in your trading week. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stenovic. We together,
Caroline's
back together.
back.
I know.
Welcome back, Caroline.
Finally, it has been a trip, guys, but I'm so excited to be back. And with our audiences across YouTube, radio, TV. It's been too long since I've been able to say that, but it looks as though I missed out on a few key stories, Carol, and a sell-off being one of them.
But you know what you didn't miss? Volatility, because you saw a lot of that before you were away. Good to have you back. One of the things that I continue to focus on is what's going on in the Chinese market. And again, we saw some pressure when it comes to those Chinese names that trade here in the United States. Once again, down about 5% in today's trade, down about 8% for the week overall. It's down 31% so far this year, that group of names. But we've seen a bounce back about 20% since about mid-March. But again, some crazy headlines overnight. We had the Chinese ordering government state firms to dump foreign-made PCs. You have Chinese officials being very coming out and saying, you know, you got to listen to what President Xi has to say about COVID-0. Do not criticize the government. There's just one headline after another, Tim, that comes out from that region.
And I'm continuing to watch cryptocurrency because Bitcoin, along with the other major cryptocurrencies, are lower today. Off a session low, but still higher by 1.5%. Bitcoin now trading at its lowest level since January of 2022.
Risk asset, need I say more? Meanwhile, we have a quick look at what's happening in terms of the majors, because as crypto sells off, it's because it's in sympathy with what's happening with the NASDAQ. The NASDAQ trading at the lowest since November 2020. We're off by 1.8% on the day, 225 points, let's call it, to the downside. But you're seeing similar lows, S&P 500 off by 1.1%. That's the lowest we've seen. That's benchmark index since about a year, May 2021. We're currently trading at just 4,099. Dow off by a percentage point, and also Russell 2000. So the small caps and the big tech feeling the most pain. It's off by more than 2% today.
The theme of the day is the theme of the year. I feel like I've been seeing a lot of that when it comes to some of the individual sectors within the S&P 500. Energy, the only sector in the green for the year that continues today. You're still up about 2%. Utilities, we're going to call that mostly unch, but you really see the defensiveness of this rally a little bit here. Romain, staples, of course, trying to be the least worst performer. Everything else, though, in these big declines is lower. Discretionary, materials, technology, you name it.
Yeah, and I think we can't just look at some of the absolute moves here this week. It really is a volatility, and I think Apple is really emblematic of that. The shares right now, they're down about 0.3%. They were down as much as 1.7%. They were actually up as much as 1.7% as well on the day, and you're seeing these types of swings across a lot of these big cap tech names. The idea here that there are some people that see a buying opportunity and other people that say, well, no, the sell-off is not over yet. The re-rating is not over yet. So keep an eye, I think, on Apple, Microsoft, Amazon, and some of those names as we get deeper into next week. Illumina shares down about 16%, just really plunging. And you were talking about some of the issues in China. Carol, this is directly related to the lockdowns in China and some of the supply chain issues. Similar story for Under Armour. Those shares down a whopping 24% right now. Keep an eye on that space. Don't forget, a lot of people, that's dragging down some of the other retail apparel makers, including Nike as well, which is down a couple of percentage points. And if you're looking for a bright spot here, Cigna, they reported earnings. They were good, very good, and those shares are up 5%.
Very good, but not helping overall when you see an S&P 500 currently on track to mark its 19th new low of the year, the most since 1977. And the NASDAQ really also under pressure the most. And now we're off by the 2% on the week. Now, when you see such dramatic moves as we did yesterday, maybe just a 2% sell-off for the week actually feels relatively muted, but it felt a lot more unch on the day earlier. It really speaks to what Romain's been saying, Carol, the fact that we've seen this whipsawing on the day, on the week, and we're now off by 2 percentage points on the big benchmark for tech.
Yeah, pretty remarkable, even, you know, what we see in just one day in terms of the moves from high to low. All right, one thing we did see, certainly some optimism. To some extent, I would say strong job gains in the latest jobs report that we got from the Labor Department, although folks have been saying to us, you kind of got something for everyone in this report. Marty Walsh, of course, the U.S. Labor Secretary, catching up earlier on Bloomberg TV. I have to say, he used the word good a lot, I think 4 times. In
not
this
wicked?
Not wicked. But used it about 4 times in this little clip from that interview. Check it out, everybody. Count along.
It's a good jobs report. Anytime you go over projections, it's a good job report. We saw some areas in this in manufacturing and transportation, which the numbers are really good in, and seeing continued strength there. Retail numbers are very good as well, and I think what's exciting about that is the fact that, when we think about retail, we often think about online shopping, and we're actually starting to see the in-store shopping stronger than it has been in quite some time.
And then, of course, is Marty Walsh, the U.S. Labor Secretary. If it was a drinking game, we would all be taking 4 shots. But he said it was a good report, and we did see gains across the board.
We need a game to start drinking?
No, it's that Friday. Don't you get to drink wine on a Friday?
We
actually do.
will have some wine later on.
Yeah, of course.
Sparkling wine.
4:30.
Should have known.
Yeah,
There's a business
I think
story
one
there.
area to really latch onto in this report is wage gains and wage growth, because it does offer some evidence that perhaps we're not seeing a wage price spiral here.
Yeah.
It's certainly an idea.
Did he
that we're
talk
not
about how
seeing
those wage
inflation.
gains match up against consumer price inflation? Because we get another
the
CPI
same, right?
print. We get another CPI
We'll get that next
week. It's going to be over 8%.
Right.
That's going to be the second straight month now that we've been 8+%. Something like the third or fourth straight month we've been over 7. And this actually completes a full 12-month cycle. When we get this, a full 12-month cycle where inflation has been at a multiple of that 2% target that the Fed is supposed to be, I guess, targeting. But apparently we're not targeting it because we're now continuing to go higher.
So average hourly earnings went up 5.5% over the year. So I guess not matching, right? Not even close.
Can I just tell you something? I went to buy a bagel.
anything.
I got the little, the egg and the cheese. I didn't put meat on it, because I'm trying to be, a little more healthy. You know how much it was? It was $8.17. I literally had to ask the woman 3 times what the price was. I thought she was like teasing me.
She thought that you'd ask for avocado.
This is, and I looked, and then I looked up at the board to make sure that she wasn't lying to me, and they raised their prices, and I thought, who pays $8? I mean, that's insane.
Oh, to be a romaine server.
This is real. I'm feeling it now.
$8
Now
a
I
bagel.
care.
The bagel index.
The bagel index, the avocado index, the any food inflation index. I mean, Romain, you were talking about chicken prices there, the supply chain woes impacting us from an illness perspective at the moment with bird flu. But really, I think that this goes back to what Carol's been talking about all along. The supply chain headache could actually get worse, particularly for what we're seeing in China. Not only just big tech being in the headlines, but so too is, the shutdowns that you see in Shanghai. When they start to reopen, what then of the ports here in the US? What then of the supply side issues?
And really trying to address the big problem for the Federal Reserve, where they can arguably control demand inflation, much harder to control supply inflation, except the only thing, Romain, maybe that cures high prices is higher prices and cramping down some of that demand.
What are prices like that over in the UK? You were in the UK, right? So when you go out and you get your beans or toast in the morning, like, are you paying like $6 for that plate now, Caroline?
Are you trying to insinuate that I've been in the UK for the last 3 weeks?
Is that,
I have not, my friend.
She has not been.
Caroline, that's news to me.
I've been in a bed. But no, inflation is arguably worse in Europe and in the UK. If you're paying for energy, you're paying 50% up on a monthly basis for your energy prices. This is painful. And therefore, this story of higher rates, of increasing rate rises, surprise rate hikes from the likes of India over in the BOE get more hawkish. This is a global story. It's not just a US $8 bagel issue.
I'm really disappointed Caroline didn't bring anything back from the UK. I mean, she's gone for 2 weeks. And you think she'll bring
I've only got
something?
COVID presents for you, and this is why I'm in a special little
be grateful she didn't bring you anything,
Maybe you should give him COVID. Maybe that's
I
what
gave
needs
her
to
a hug
happen.
this morning.
Hey, don't forget, we're going to get inflation reads on Germany and China next week, too. So we will see the global inflation picture.
All right.
We'll be back
Got
in
the
less than an
simulcast?
hour's time. Maybe there'll be bagels for everybody or wine for everybody.
Yes.
Just us.
In less than 45 minutes. Anyway, our cross-platform will continue beyond the bell. We will count you down to the close, wrapping up the week and the day here on Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
See, we're all a little salty right now.
I gotta tell you.
What?
Okay, I don't get it.
What don't you get?
We order the same pizza every Friday night.
Did you
Okay.
finally ask them?
Haven't asked them yet.
Because are you afraid they're going to be like, yeah, he's
Exactly.
right.
I'm a little afraid.
Ka-ching.
Same pizza every Friday night. Okay, $25. It's Brooklyn, so things are a little expensive to begin with. If that
Yeah.
price sounds high,
But
but
it
it's a
hasn't
really
changed.
good pizza.
So you're saying it hasn't changed in what, 3 years, 4 years?
2 years since we
2
started
years.
doing this every night. Yeah, but think about the way inflation has changed in 2 years.
I don't know.
Yeah.
What are you getting on your pizza?
We just get the margarita. Yeah, it's really good.
Cheese, tomatoes,
Yeah,
wheat.
a little bit of basil.
We know all this stuff. I don't know. That's a really good question. I know
And labor costs too, Carol.
Right. I know in my world, there's some things I agree with, like going to the grocery store, and I'm like, what? I got 4 things, and it's just a lot of money, and this is really tough on a lot of individuals here in this country. Anyway, our conversations will continue. Right now, though, we do want to get to Nancy Lyons with World and National News. Hey, Nance.
Thanks, Carol. The Labor Department added 428,000 more jobs in April, but there were almost twice as many job openings than people looking for work. Bloomberg's Irv Chapman has more.
There's definitely a gap between the needs of industry for employees and the skills of available workers, Commerce Secretary Gina Raimondo said in a Bloomberg interview.
You have to start with the business community and the business need and then work backwards to tailor the training instead of starting with folks who are unemployed. But there's no question about it. Right now, there's 500,000 cyber tech jobs unfilled in America simply because folks don't have the skills.
Raimondo said women are also being kept from taking jobs in the professions in which they predominate because of child care and other family needs. In Washington, Irv Chapman, Bloomberg Radio.
The U.S. says it did share intelligence about the location of a Russian missile cruiser before the Ukrainian strike that took it out. Bloomberg's Maria Tadeo reports it's a sign for European allies that the U.S. is back as policeman of the world.
The intelligence was on point. It was perfect. They got it right. The timing, they got it right. And when you speak to Ukrainians, they also say it's not just the weapons. This intel that the U.S. shares with us has allowed Ukraine to stay very competitive in this war, where in principle, the Ukrainians should have lost weeks ago. This was an army that was almost outnumbered 10-1.
That's Bloomberg's Maria Tadeo. Now, Pentagon spokesman John Kirby says the U.S. did not provide specific targeting information, but he says the U.S. and allies routinely share intel with Ukraine. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons with World and National News in our 99.1 newsroom in Washington, D.C. So this is a fun story that's on the Bloomberg today.
Yeah, this is all about bankers quitting their jobs for a shot at riches in the Wall Street of crypto. This is a story that could have been written a year ago, too, Carol. And I wonder, I was talking during our simulcast about the decline that we've seen in Bitcoin, crypto getting hit really hard, along with all risk assets right now.
Don't you feel like it could have been written in 1999 to 2000
with
about
tech companies?
Bankers, or folks quitting Wall Street to go work in Silicon Valley or at tech startups?
Yeah, for what, pets.com? Or...
Yeah. Where is that now?
Yeah.
Where's the socket? Sock puppet?
Yeah, exactly.
Right. All right. So what is this story? This is looking specifically, though, at crypto.
Yeah, and specifically in one part of the world. In the shadow of Dubai's shell-shaped Burj Al Arab hotel, crypto executives rubbed shoulders with Emirati royals, Wall Street bankers, and Instagram influencers. These festivities were in late March, and they were organized by Binance in its de facto home of the UAE, which is fast becoming a global hub for digital currencies. The co-founder and CEO, CZ Zhao, skipped the event as he recovered from COVID, but he was top of mind for partygoers who said they aspired to replicate his rapid ascent from software developer to one of the world's wealthiest people. I think CZ used to work here at Bloomberg early on.
I'll have to check the terminal.
Yeah.
Okay. So why do we care and why you should care is that we're seeing that many are flocking to the UAE, which is now some are calling the Wall Street of crypto. This means local bankers, lawyers, and big tech executives pondering career pivots of their own to cash in. And this is like you see this at the beginning of any kind of ride in terms of a new asset class. You see a lot of folks kind of leaving the establishment and saying, okay, wait, maybe there's some huge opportunities here.
One thing I was thinking about earlier today, Carol, when I was reading in was, what does it look like when the dust settles here when it comes to crypto? Because not every one of these firms that's getting so much money in financing right now is going to make it. So who's left standing in 2, 3, 5 years?
Not every digital currency. How many are out there? There's
more than 12,000.
So many. Not all of them are going to make it. But anyway, lots of detail in this story and just what's going on in one part of our world. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Red on the screen. In fact, U.S. stocks just about the lowest in a year. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
Good afternoon, Charlie. That's right. U.S. stocks in the red in a very choppy session. The Dow's currently down 370 points. Was green at one point. S&P's down 55. NASDAQ is lower by 260. The U.S. 10-year yield at 3.12%. Gold is up 4. Oil is in the green. And Bitcoin is down by 1.5%. Among the main 11 S&P sectors, only energy and utilities were in the green. And leaders to the upside in the Dow, Chevron, IBM, and Amgen, while Nike led to the downside. After earnings, Under Armour plunged as much as 27%. In IPO news, Bausch & Lomb opened at $18.50. The IPO was priced at $18. And wrapping things up, Monster Beverage rose 4% after its earnings. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, thank you very much, Bill. Have a great weekend. And to hear live breaking news over your Bloomberg-type squawk, ASQUAWK on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. And, you know, watching what has been just a crazy market environment this week. And what's interesting is we are seeing stocks really push toward their lowest level since May of 2021. The big debate, the big questions, you can read it on the Bloomberg terminal at Bloomberg.com. It's just, where are we in terms of have we hit a low? And so much of it has to do with what the outlook is and how aggressive the Fed is and how much they ultimately bring down inflation and how much they slow the economy. There's an interesting story, though, out there on Bloomberg that talks about, though, earnings estimates have been starting to go up, especially over in Europe. So it's, you know, you've got to look at, Gina Martin Adams always reminds us that things are kind of slowing down in terms of maybe some of the forecasts that are coming out, but you've really got to watch these numbers. What are CEOs saying ultimately about the business environment?
Yeah, you make a really good point, and we are in the midst of earnings season, so we are hearing from CEOs. We heard Romaine earlier talk about the troubles that Under Armour is having, for example, when it comes to supply chain issues, especially with regard to Chinese shutdowns.
And that's not that the business is bad, it's just that they can't meet demand.
Exactly. But there are other stories here too, Carol, and those have to do with interest rates moving higher. And that's something that you hit on and what the Fed ends up doing. And I think even though we have seen this decline in the NASDAQ composite, the NASDAQ 100 is at its lowest level in more than a year. The NASDAQ composite, lowest level since 2020. So even uglier when you take a look at even more stocks that are traded on the NASDAQ.
Yeah.
It actually hides some of the issues that a lot of these companies have because you see some companies down, like Netflix, 70%, 80%. You look at SPACs. Some of the exuberance that we saw in 2020.
Said to us yesterday, right?
He said that, you know, a company like Netflix could be a value right now because it's, you know, trading at a fraction of what it was trading at before, but it's still making really solid revenues.
And this is where you have to take a look at the company and their fundamentals, take a look at the balance sheet and decide whether or not, you know, there is something fundamentally wrong, you know, in terms of the business story going forward. It's interesting because I was looking at some of the stories that I was reading in this morning. You have Bank of America strategists saying that the historic rout isn't over yet. They say stock lows, yield highs yet to be reached. Strategists saying the current positioning shows paralysis, not panic. And there was another story that really caught my attention, and it has to do with kind of what we're seeing. This comes from the European Central Bank, their executive board member, Isabel Schnabel, and saying that climate change is leading to higher rates. The fight against climate change and war in Ukraine are creating a new macroeconomic environment where higher interest rates may be needed to ensure consumers don't lose faith in central banks' ability to keep inflation under control. This goes to some of the conversations we had at Milken about strategically, fundamentally, some changes that are going on in our economy. You and I talk about it. Whether it's the energy markets, there are shifts going on, food production, supply chains, where we do it, alliances that we have. And these will ultimately maybe cause some stress points like we are seeing in our economy right now, and will take some time to work out.
So what does it mean for our portfolios? And that's the question that our audience wants to know. It's something that we've been asking all of our guests with our Drive to the Close and other guests who watch the markets, because I wonder what it means for asset allocation, Carol, and if indeed we are seeing the end of the bull run, the historic bull run that we saw since the great financial crisis.
Well, this is what,
The low interest rate environment.
Our TV colleagues have talked about it a lot. Certainly Taylor and Romaine hitting on this often. Taylor in particular, if you look at what's going on in terms of the fixed income market, the treasury market, now that yields have moved up, you start to say, okay, here's something that maybe is certainly seen as a less risky play here, but I've got some yield now, versus the equity market where there's so much volatility, right? I've now, for such a long time, right, there was no other alternative, Tina, right? You wanted to go to the equity markets because that's where there were some gains, that's where there was yield. Well, now the fixed income market is starting to look a lot more attractive.
What about when it comes to the growth versus value debate? Because, it's been a debate every year for the past decade more, and we've seen growth really overtake value.
Right. But get really beaten up.
Get really beaten up, especially right now.
This goes back to the fundamental stories. And so did valuations get ahead of themselves? Absolutely. Are we seeing the economy try to get back to what is the economy? What is growth in not a pandemic world, where you saw companies, whether it was a Netflix, whether it was an Amazon, so many that that benefited because of where our economy was, a lockdown, and grateful that there were services that could keep everybody going, right, and meeting their needs. But what is our economy post-pandemic? And I think that is some of what we're seeing. So it's not that all of a sudden we're falling apart completely, but we're getting back to a more normal economy.
What does inflation look like in a more normal economy, in a post-pandemic economy? And, you asked that question from the perspective of supply chains, and it's a supply-driven inflation. So we're seeing that play out, and we certainly are seeing that play out with companies that are stuck with supply chain issues because of lockdowns in China. And as a result of those ships not being able to get to the United States. And like Caroline made the point, Carol, that what happens when those ports do open up, when those factories do open up and their ships do come and make their way to the United States, we're going to see those port buildups again that we saw, over the last few months.
Right. And so this is kind of, until this stuff works out and we start to find what the normal level is, one that has the right labor force that it needs, and, just that demand and supply are much more in alignment. The other thing is watch, certainly as the Fed, it's not just about the Fed raising rates, it's about financial conditions. And if we start to see a tightening in them, that's something more substantial about what kind of slowdown might be coming. And that is why so many of our guests, and certainly when we talk with our TV colleagues, Romaine, Caroline, and Taylor, we talk about watching financial market conditions, whether credit conditions are tightening, and that will say something about potentially the business environment going forward.
All right, well, we could.
The easy stuff, right?
The easy stuff, yeah. We'll solve it all.
Hey, coming up, we're going to talk a little bit about what's going on at Tesla and the man behind Elon Musk that maybe is keeping the house in order. We'll get to that. That's coming up on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So this next story is among the most read on the Bloomberg. You saw it and you're like, this morning, like, we got to do this.
It's all about the man behind the man.
It always is.
Yeah, we're talking about the man behind Elon Musk, a really great profile. We're going to speak to Leanna Baker, Deals team leader at Bloomberg News. She'll be with us in the Bloomberg Interactive Broker Studios. We'll learn all about who he is and what he does.
Got this mysterious thing going on.
He's kind of a mysterious guy.
I mean, just saying.
Well, I got to tease it out a little bit.
Getting all James Bond on me.
All right. Well, you know, you got to do what you got to do on a Friday afternoon. Well, speaking of Friday afternoon, it's less than a half hour to go until the close of trading. Charlie Pellet, how are things looking?
What a week this has been, Tim. And right now, red on the screen with the Dow, the S&P, NASDAQ, all slumping. S&P's down 39, drop there of 1%. Talking about Tesla, among the stocks declining today, down 1.3%. We've got NASDAQ down 219 now, down 1.8%. The NASDAQ 100 index also declining today. That index down by 1.6%. The Dow, which had been down 523 points, now down by 249, drop there of 0.8%. The 10-year yield, 3.12%. Bottom line here, volatility continuing to dominate financial markets. Stocks pushing lower as this morning's jobs report cemented expectations that the Fed will remain on its rate hike path to combat stubbornly high inflation. Again, the 10-year yield, 3.12%. Gold up 0.3, $18.82 the ounce, while West Texas Intermediate crude up 2%, $110.42 for a barrel of WTI. America's labor market chalked up a robust gain in April, while the unemployment rate held steady at a historically low 3.6%. Employers added 428,000 jobs last month, matching the prior month. The labor market has added 2 million jobs since the start of the year. Reaction to this morning's jobs report from U.S. Labor Secretary Marty Walsh.
We clearly know that there's work to be done. We were looking at that number this morning as well about the people that are not participating in the workforce, and we're looking at the number of the people that for the last month haven't or looked for a job but didn't get a job. And clearly the question is, if we have 12 million jobs opening, 6 million people roughly looking for work, why shouldn't they be able to find a job?
After earnings, Under Armour shares, they are plunging now, down 26.2%. Also after earnings, Zillow down 3.6%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. As we said, it's a little bit of a wacky Friday.
And it's not even Friday the 13th yet, Carol. That's 1 week from now.
I know, and it's, we were on the West Coast just a few days ago. Speaking of someone who's not quite on the West Coast, although he spends a lot of time, he used to be, right?
Yeah.
He used to call that home, hasn't for a while. We're talking about Elon Musk. This story, by the way, among the most read on the Bloomberg, it's about Elon Musk's fixer who is quietly tending the world's biggest fortune.
Leanna Baker is one of the authors on that story. She's Deals team leader for Bloomberg News. She joins us on the phone from New York. Leanna, tell us about the man behind the man. Who is Jared Birchall?
So Jared Birchall has been working with Elon Musk for the past 6 years. He's a former Wall Street guy. He started his career at Goldman Sachs. Then he worked at Merrill, where he was fired. Finally, he found a home at Morgan Stanley, which is where he started to sort of manage wealthy clients. And he had a knack for it. And certainly that's, come in handy here with Elon Musk trying to buy Twitter and all sorts of different projects that he's put Jared Birchall on. And he's also the only employee, it seems, of the family office. So for the world's richest man, that is a tall order.
So it's so interesting, I feel like, with Elon Musk's universe, right? He is certainly the face of all things Elon Musk in his world. But then we start to quietly find out about these really smart individuals who are behind the scenes, whether it's SpaceX or whether it's Tesla. Did you have to do a lot of digging, or did the company say, hey, maybe you want to write about this dude? Especially with everything that's going on. And I think people are worried about, Elon Musk, can he take another thing, put another thing on his plate?
My colleague on the wealth team, Sophie Alexander, did a lot of the heavy lifting and a lot of the digging into filings to find out more about Jared Birchall. I'm more the person that talks to Wall Street and M&A professionals. And from what I understand, Birchall is very much in the inner circle, and he was instrumental at putting together the Twitter bid. He was sort of the face in front of the banks and helped corral them, along with the help of his former employer, Morgan Stanley, to get Musk the money to do this deal. So he's really a key person here.
What do we know about just the way just his career and what he does? And it's interesting because he's sort of the antithesis of Musk in some senses. You and Sophie in the story compare and contrast the two men and note that Birchall is part of the Mormon Church and went to BYU and has kids and is married, whereas Elon Musk, has 7 kids, has been divorced 3 times, and there are a lot of differences between the two of them.
For sure. Sometimes you need someone to kind of balance you out. And as a Mormon family man who's very much out of the headlines, except from the story today, Birchall definitely serves that role for Musk. People I spoke to who know him just described him as very nice. He just, gets things done, even though he didn't have experience putting together multi-billion-dollar deals for big internet companies like Twitter. He made it happen. Being a manager of a family office also involves taking on odd jobs. Apparently, he's in charge of helping Musk get nannies for all his kids. So it's not a job for everyone, but Birchall certainly, fits the bill here.
Well, and I do think about, Elon's relationship with the financial community, especially as he's trying to do this Twitter deal. And right over the last week or so, we keep getting more pieces about it. And it really looks like he has lined up so much of it. But I do wonder about having someone like Birchall, who worked on Wall Street, understands the financial community. How does the financial community see this dude?
Right. So he was definitely someone who's coordinating behind the scenes. Let's say he would come on a video call first to say, okay, I'm getting Elon next on the call, but Birchall will be the first person you see. He's the one with ties to Morgan Stanley, as I mentioned, as a former employee. But I also heard that he's just a nice guy and he's not going beyond his capabilities. He'll rely on experts and help hire people to bring them in to do what has to be done for Musk's financial empire.
Leanna, he's managing the family office of the world's wealthiest person, more than $260 billion net worth.
Right, how much?
$260 billion net worth. I mean, most of it's tied up in Tesla, 16% stake of Tesla, as you guys write. How lucrative is this for someone like Birchall? You mentioned in the story that he bought a $2.5 million home in Dallas, but, we're not talking tens of millions of dollars yet, maybe?
So we don't have any filings or anything to show what his salary is, but we do know that managing a family office could be very lucrative. You can make millions a year. One expert said up to $3 million. But considering he's one of very few employees for the world's richest man's family office, the sky's the limit. Some billionaires' family offices have 100 employees, and Musk only has 1 or 2. So he's really the only guy. So if there's someone to pay, it would be him. But again, we don't have the reporting to show what he's making.
I do feel like it's Elon's world, and we're all just living in it.
Well, that's because you spend so much time on Twitter.
It's so true. Leanna, thank you so much. Really appreciate it. Leanna Baker, she is Deals team leader at Bloomberg News, joining us on the phone in New York.
Let's get to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim. President Biden is in Ohio celebrating U.S. job gains in manufacturing. The Labor Department reported today the country gained 428,000 jobs in April despite high inflation and an anticipated interest rate hike from the Fed. He is hailing an agreement between large companies and smaller suppliers to boost so-called additive manufacturing, or 3D printing. Well, we're headed to what could be a pivotal weekend in the war in Ukraine. Bloomberg's Nathan Hager has more from Washington.
Leaders from the Group of 7 nations plan to discuss new sanctions against Russia on Sunday. Sources tell Bloomberg News the call will give leaders the opportunity to coordinate and potentially finalize any new measures. Ukrainian President Volodymyr Zelensky is expected to join the call. The U.S. and its allies are pushing to conclude new sanctions on Russia ahead of its Victory Day parade on Monday. That's when the Kremlin marks the end of World War II and when Russian President Vladimir Putin is expected to give a speech about what he's called his special operation in Ukraine. In Washington, I'm Nathan Hager, Bloomberg Radio.
Well, the Pentagon is working to replenish the weapons that it has supplied to Ukraine. Defense Undersecretary William LaPlante says it's important to keep supplies on hand, both for Ukraine and also so the U.S. won't find itself shorthanded.
The last few weeks have really highlighted the intensity of conventional conflicts now in the 21st century, and the demand for munitions and weapons platforms, it really outpaces anything we've seen in recent memory.
Undersecretary LaPlante says the U.S. military is currently looking to sign new contracts on military hardware. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. World and National News with our Nancy Lyons in our 99.1 newsroom in Washington, D.C. Hey, a story we did want to bring to you has to do with Cathie Wood. Her famous, and her faith, really, longtime faith in Elon Musk doesn't appear to extend to his potential leadership of Twitter. Funds managed by Wood's ARK Investment Management had already been selling Twitter this year, even before Elon Musk, the co-founder of Tesla, of course, struck a deal to take Twitter private. On Thursday, yesterday, when Twitter was one of the few stocks that gained amid a vicious rout, the fund sold a further 875,000 shares, nearly eliminating all of their remaining Twitter holdings.
Okay, so here's what's interesting is Twitter is supposed to be taken private by Elon Musk at $54.20 a share. It's right now trading down 1.1%, Carol.
Yeah.
It's at $49.81. We mentioned it yesterday to Alan Patrikoff, and he said, it's there's not really that much arbitrage to do here. The deal is still far away, potentially closing. But maybe Cathie Wood. What does Cathie Wood's? What does she say about that? Right? I mean, in the sense of what does her sale say about that? Does it say that she's not confident that the deal will happen, so they won't get to 54.20, or does it say that this capital at Twitter's return could better be used elsewhere, and she's going to reinvest that money elsewhere?
Here's a little perspective. Her next generation internet ETF, ARK Next Generation Internet ETF, which had about 5% in Twitter at the end of last year, cut its stake to about 2% by this week, and then almost entirely disposed of it yesterday, according to data compiled by Bloomberg. You can see what she's got, what she's doing in terms of her holdings at the end of every trading day. What's interesting is Wood had expressed concerns about the platform that were similar to Musk, saying her firm's confidence in Twitter, quote, was nicked a bit as we saw some of the censorship issues and controversies after his deal was announced. She thanked Musk in a tweet. She does, though, think about kind of what's the next generation of things, whether it's innovation and disruption. She says that a lot. She's looking always for the next Twitter, the next Tesla, constantly.
It's been a tough couple of years for her,
Yeah,
but she called it that Musk would take a more active role. She said that to us in an interview just a few weeks ago.
And we've seen money going into her funds again, some big flows. All right, you're listening to Bloomberg.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Are we seeing dip buyers coming in? We've got the S&P after a turbulent week down 20 points right now, lower by 0.5%. The Dow, which had been down 523 points, now lower by 69. It is down by 0.2%. NASDAQ down 161, a drop for NASDAQ of 1.3%. Key takeaway, U.S. stocks now at the lowest level since May of 2021. Jobs Friday and volatility continuing to dominate U.S. financial markets. 10-year yield 3.11%. Spot gold up $7 the ounce to $18.84, up 0.4. West Texas Intermediate crude up 2.1%, 110.57 a barrel on WTI. The Dow, the S&P, NASDAQ all lower. S&P right now down by 13 points. The Dow worth recapping, now looking at a loss of 34 points with just 12 minutes to go ahead of the close. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Much as expected, the Federal Reserve recently raised its policy interest rate by 0.5 percentage point. With inflation high, the move makes sense. However, the Fed needs to improve its messaging. Specifically, it should clarify its position on the neutral rate of interest, which is rapidly becoming investors' new fixation. The central bank's current ambiguous approach has invited confusion and led some observers to believe the Fed has an arbitrary endpoint for interest rates. It doesn't, or anyway shouldn't. Rates should be adjusted to keep demand on track. Changing conditions will dictate what that requires. The Fed will need luck as well as skill to engineer a soft landing. But its job would be a bit easier if it directed investors' attention away from imaginary targets and toward what's actually happening to the economy. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, it's just about 10 minutes left in today's trading session, getting ready to wrap up another volatile day and another volatile week. Although it's interesting, we are seeing some buying into the close. So here we are ahead of the weekend, and we're seeing certainly all of the major equity averages bounce off their lows. We're still down, but just barely lower on the Dow. Dow just went into positive territory. It's now up about 5 points. S&P, as we heard from Charlie, still down, but this is what we're seeing here.
Yeah, volatility is the name of the game right now.
Yeah.
Steve Brown is Senior Portfolio Manager at American Century Investments. They've got $215 billion in assets under management. Steve, how are you?
I'm very good, thank you.
Hey, good to have you with us. What are you thinking when it comes to this volatility right now? I mean, it's really surprising to see that this is just continuing even after we got more insight into how the Fed is thinking about interest rates and its balance sheet.
Well, sure. I mean, basically, the Fed said they're going to raise the Fed funds rate this year to address inflation's concerns, and it's taken a while for it to price into the equity market. The bond market has sold off pretty dramatically this year because of the higher rates. The equity market has been fighting it a little bit, but it's starting to price in higher rates and the impact of higher rates on the U.S. economy.
So what does it mean for a sector that you focus on, and that is specifically the real estate area? And I'm looking at, for the week overall, real estate. If I look at the 11 major industry groups in the S&P 500, the real estate index was the worst performer, down about 3.6% for the week overall. If I look at year to date, real estate is down about 13%, but near the bottom of the pack. Higher rate environment, obviously very tricky, can be, and we're watching it very closely when it comes to the residential market. How about for the assets that you oversee, whether it's in the Global Real Estate Fund or the Real Estate Fund over at American Century?
Sure, great question. Well, the REITs have sold off a lot in the last week, frankly, because of concerns of higher rates. So higher rates, investors have concerns that cap rates, which is used to value commercial real estate, will go up. So that's a valid concern. I would say, though, that real estate, commercial real estate, also benefits from inflation. So they've had, expanding earnings over the last 12 months, and actually pretty good earnings so far in the first quarter of this year, because with inflation, you've got it impacts construction costs, makes new construction more expensive. And secondly, there was a slowdown in construction during COVID. So demand's been better than supply, and first quarter earnings look good, and we're expecting about 10% earnings growth for the REIT sector this year. But in terms of when the investors, focus on interest rates, real estate does show up as an asset class that has a negative impact on rates in terms of the valuation of the properties. But if they focus on inflation, generally that's a positive environment for real estate earnings performance and stock price performance, because inflation is commercial real estate's friend.
So when you're thinking about these REITs and analyzing them, how do you think about inflation and the stickiness of inflation right now? We didn't even hear the word transitory once from Fed Chair Jay Powell earlier this week. That debate is no longer a debate. But do you think that inflation has peaked?
Well, we think as we get to June, the comps, the comparables for inflation will be easier, so you have that going for it. I would say that eventually we believe the Fed will win the battle as they continue to raise rates. It will slow down the economy, which will slow down demand for a lot of activity. So it should have a cooling off on prices in the CPI sometime in the second half of this year. There are some property sectors that have done actually pretty well this year. They're more defensive, such as healthcare and open air shopping centers. But the healthcare space, which is REITs that own senior housing, they're up about actually 5% year to date, because the fundamentals are improving. And if people are concerned, it looks like they are, about higher rates slowing down the economy, then a more defensive property sector such as healthcare REITs, their demand for their product type will probably be less impacted by a slowdown in the economy than many other sectors.
So, right. So we understand the benefits necessarily, in terms of inflation or a rising interest rate environment. What about, though, obviously the other side of all of this is, and we talk about this, Steve, in terms of the Fed overdoing it and leading to some type of recession. And then, you wonder how long that recession potentially could last. How much does that maybe worry you or kind of shape the type of investments you want to be in right now that you want to kind of get ahead of in case we do fall into a recession?
Sure. We definitely believe that the Fed's going to continue to raise rates until they get the results they want. And I think one of the after effects of their rate hikes will be a slowdown in GDP in the second half of the year in the United States, as well as a reduction in earnings estimates for many companies within the S&P 500. So in that environment, we've shifted to the more defensive property sectors, such as healthcare, such as open-air shopping centers, such as tower REITs also. I mean, the demand for their product, wireless connectivity, will remain strong. And we've reduced in some of the more, or reduced quite a bit in some of the more volatile sectors, such as, say, regional malls and or the office sector, which will be impacted by perhaps a slowdown in hiring in the second half of this year.
Hey, Steve, I want to go to some specific names here that you've got your eye on. You like Kite Realty Group Trust, ticker KRG. What's appealing to you about Kite?
Okay, sure. It's an open-air shopping center company. They did make a large acquisition last year. And basically what they're benefiting from is a strong leasing environment, low bad debt into part of their tenants, and the reopening trade is working very well for them. And their type of tenants, such as a Target, a Walmart, Dick's Sporting Goods, et cetera, they're opening stores and they're blending their in-store presence with their online presence. What that means is that they're very comfortable having buy online and pick up at the store as a theme. And so they're benefiting from that trend. And so we see very good, actually, NOI growth for the open-air centers, and in particular Kite. Kite bought another REIT last year, RPAI, at a very attractive rate. And the deal didn't close to, say, the fourth quarter of 2021. So they're getting the benefits of that transaction in 2022, and they'll have some very good earnings this year and beyond.
Yeah, and recently raised their 2022 guidance, so certainly they're upbeat about the outlook. Hey, Steve, we've got to run, but really fun to drill down into this sector, certainly something we talk about a lot here at Bloomberg. Steve Brown, he's Senior Portfolio Manager over at American Century Investments, roughly $215 billion in assets under management, and he's involved in both their real estate fund and their global real estate fund, joining us on the phone in New York City. All right, we've just got a couple minutes. What were you going to say?
NASDAQ's still down 1.4%, but the S&P 500 is really giving back some of those losses.
Yeah, it's really interesting because I've been watching gainers, winners, and losers, and it was very broad-based in terms of the selling, and now we've seen a bunch of names tick higher here, so it's not so risk-off, if you will. But nonetheless, we do see the S&P still down about 22 points, Dow off about 98, and the NASDAQ 167 points lower. Right now, it's time to head over to our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We are counting you down to the closing bell on this Friday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Boston, Caroline Hyde back. Taylor Riggs still here, counting you down to the closing bell. And they're here to help take us beyond the bell. It's our global simulcast. We're joined right now by Carol Massar and Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube here. Taking a look at a market, Carol, that is off the lows of the day, but the damage is done here. We're lower on the day and on the week.
Yeah, absolutely, but only a hair lower, considering all the volatility and the big moves that we saw in individual names and also the overall equity changes. It's amazing that we're not down a lot more, although the NASDAQ, you're still seeing more than a 1% drop for the week overall, Tim.
Yeah, that's really what I got my eye on too, Carol. We're down for the last 5 days on the S&P 500, only 0.1%, and the Dow just shy of 0.2%. Yeah. Given all the selling,
you know what I have my eye on? I'm looking at a Twitter post by Carol Massar.
Yes.
I knew this was
sparkling.
I wish
wine.
we could.
Have you guys drank all of that yet?
No,
you
we
know
haven't. But I got to tell you, people. She tweeted out this photo, and you know, too bad we don't have a picture of it right now. But she's holding a lot of wine. And
there's a
I've already,
business story.
people
it's
have
actually
already gotten in
multiple
touch with
bottles
me.
of wine.
People have already gotten in touch with me
I thought she just
what's
cracked
going
open
on
and had
here.
a glass or something.
I thought you were just
Holding 4
celebrating
boxes
your
of this
shorts
stuff.
on the market because that's the only place you've been winning if you've been this week in the longer term. But you're right. Overall, this has been a pain trade. Whether you've been long bonds or whether you've been long stocks, maybe not long wine though.
1, 2, 3, 4. So I at least see 4 boxes. There's 5 of us.
I'm
Maybe,
gonna.
There's more.
I'm gonna save us and bring us back to these markets.
Are we
as
talking
we're
markets?
Still off 1.4% here on tech remain. And as we've been mentioning, though, big swing up on Wednesday to the big decline down Thursday. Some of the biggest volatile moments that we've had in this market going back since the 70s.
Remember yesterday we were quoting Dow points?
I know.
I don't think
It
we
was
need to do that today. We're down 86 points if you care about that on the Dow Jones Industrial Average. It's going to finish the day down roughly about 0.3% as we wait for these numbers to settle. On a weekly basis, though, that's only down by about 0.2% here. So when you talk about the idea that maybe this wasn't sort of the panic selling that we saw all week and that people are willing to buy this dip, maybe that's representative of that. The S&P lower by 23 points or about 0.6% on the day, only down about 0.2% on a weekly basis. The NASDAQ not faring as well. It's down about 1.4% on the day and about 1.5% on the week. And the Russell 2000, you really have to keep an eye on some of these small cap names because we saw some pretty persistent selling here all day long. In fact, all week long, the Russell 2000 lower by 1.7%, Carol.
Yeah, I'm just going to draw your attention to the best and worst performing name in the S&P 500 for the week overall. Best performing, EPAM Systems, up more than 30%. And the worst performer, Romaine, you talked about it earlier. You care to guess?
Oh.
Etsy?
Under Armour, down more than 30%. It's also one of the worst performers this year.
You know, Carol, when we think about some of the individual performers, I also want to look at some of the sector movers. Dare I say it, a little bit better breath than we had yesterday. There actually are a few sectors, sort of 2 levels down for the S&P 500 that are in the green for the day. Let me walk you through them. It is a little bit defensive. Energy will take that out. We know that that's up 3%. Household products, utilities, food and beverage, communication services. That really highlights, Carol, the big defensiveness of the nature. You're up anywhere from 0.5 to about 0.9%. Down at the bottom, though, things do really start to look bad in terms of the worst performers here. It's all technology. It is all revaluing some of these long duration assets, software, media, and then, of course, some of these food and staples as well, which is interesting when we think about some of this food inflation underway.
Yeah, a lot of selling. So it was a little tough to find some some gainers, but I found the Monster beverage among them, up about 4.4% in today's session. Top of the NASDAQ 100. Mixed earnings report, which is interesting. Better than expected sales. They did fall short on EPS and margins, but analysts seeing those margins improving. They said there's going to be U.S. price increases and an expected easing of some temporary headwinds. So some upbeat thoughts there when it comes to Monster. Also want to mention ChemoCentryx Incorporated. This is a biotech company leaping about as much as almost 25% in today's trade, settling still with about 11% gain. This is after it reported first quarter results. It included a ramp up in sales for a new drug to treat a particular disorder. Oh, what's this? Sorry.
Oh, we're listening. Go ahead. Sorry, Carol. Go ahead.
Okay.
Yeah.
I'm hearing voices in my head, but that's pretty common.
Well, after 3 glasses of wine.
I haven't had any wine. You can't have wine until after the closing bell. McKesson, also an outperformer, up almost 6%. Evercore ISI and Barclays also coming out, raising their share price targets after the company forecast adjusted earnings per share for 2023 that topped analyst projections. I'm done.
All right, well, my turn now. I'm going to talk about Under Armour. Romaine, you hit this earlier, but it was such a big move. I wanted to hit it again. Shares of Under Armour taking a real beating today, down close to 24%. Struggling with supply chain issues, pandemic-related shutdowns in China. We saw companies such as Nike and Lululemon also take a hit as a result. News Corp.
The thing I thought about the Under Armour, though, I mean, they are actually talking about like actual canceling orders and things like that too. So this seems like a step beyond, I think, what we've heard from other companies and their supply chain issues.
It does, and the question is, though, I mean, we talked about this with Mattel's COO and CEO in the last few months. I mean, these are companies that have changed their supply chains as a result of what's been happening over the last couple of years. When do we start to see companies actually make, permanent changes? Brooks' CEO, we spoke to him last week. It's a Berkshire Hathaway company. They got lucky back in 2019 moving their production from China to Vietnam.
And I can tell you, this is a real issue. We were trying to buy tennis shoes for our son, and I mean, the model that he wanted.
There's a little Romaine.
They couldn't find them. Yeah, and he's even more handsomer than me. But
hard to imagine.
But no, in all seriousness, I mean, you know, it's just like you just couldn't find it. I mean, they just don't exist anymore because of these supply chain issues. And then you just buy a different brand, right? You just move on.
I mean, I heard soccer cleats, just impossible to get right now. Shares of News Corp, the parent company of the New York Post, the Wall Street Journal, taking a hit today. The company shares falling more than 13%. And Peloton actually hitting an all-time low today, down 7.7%. This comes after news that the company is said to be exploring a sale of 20% of the company, looking for a major corporate partner or perhaps a private equity company to come in and supposedly validate the business.
Supposedly. Here's hoping. I still validate that business from a personal perspective. Let's have a little look at what's happening in terms of commodities and across asset, really, because we're seeing, once again, actually oil managing to hold up relatively strongly. This, of course, is, as we see energy, the only outperforming industry group in terms of stocks. We're seeing oil posting a second weekly gain. This is all on the back of, once again, Ukraine, Russia, and Europe potentially getting that little bit closer to a ban on Russian oil, tightening up that market. We're seeing oil having its first, I think, back-to-back gains in about several weeks now in terms of and hitting actually a 6-week high. That actually, interestingly, as we see the dollar continuing to push higher. So overall, we're seeing a mixed market in commodities. So oil on the upside, but look at what's happening in terms of King Dollar, really your only haven of choice. The Norwegian krone has been somewhat supported by the likes of the commodity prices going higher. The Canadian dollar not finding support from commodities because its story is one of actually deteriorating labor market, a labor market that is so tight that we saw numbers really sort of shock people today overall. And still we got a story really of the US being the only hawkish, well, main hawkish game in town, and that's why the dollar continues to outperform. Taylor.
What about Andrew Bailey? He's pretty hawkish.
Yeah,
he's hawkish, but doesn't help the
incredible.
pound when energy prices is going up and they're talking about recession.
Yeah, a good point there when you think about maybe one of the few central bankers, or maybe with gumption, to talk about stagflation. That is a whole different story. But let's get back to full faith and credit here. I think really interesting. Intraday basis, you're getting up another 2 to 10 basis points or so across the curve. For a weekly basis, Carol, you have a 10-year yield that's rising for 10 straight weeks.
Wow.
You're up 19 basis points on the week. So again, putting this week in perspective on a huge week where we saw 50 basis point move from the Federal Reserve, the first time since 2000, and another decent jobs day today.
All right, so in terms of putting into perspective, next week we're going to hear from a lot of Fed speakers, right? We've got Mester, Bostic, Williams, Kashkari, Barkin, Waller. I mean, all of them will be coming out. So I'm curious to like how they shape the narrative, or how much is in kind of a debate, if you will, among those Fed members about what we got in terms of the Fed decision this week. So I wonder how that will help or hurt the market trade next week.
Yeah, I'm interested in that too, because you remember just how much chatter there was after the last meeting, how I guess forthcoming some of them were willing to be about their thoughts on whether the Fed was being aggressive enough. I think when you sort of overlay that with some of the economic data that we're getting next week, including a key CPI report as well as PPI as well, that's expected to be persistently elevated, what that commentary is going to look like.
I've been reading some analysis for CPI and remain, even on a core basis, you're looking at a minor deceleration, maybe from 6.5%, but core is still going to be above 6. Don't even get me started on headline inflation, and know that the central bankers ignore it, but the real people on the ground still have to pay on that headline inflation.
And the prices are too. I mean, I was joking earlier about the bagel that I paid for this morning, but when you go into stores now, the price increases, I think, are noticeable. I mean, I know they've been going up before, but if they just went up a smidge, you kind of didn't notice it. But now there's just huge jumps, and I think that you notice.
And it's sticker shock, and it's also at a time where you're not getting sticker shock in your paycheck. What is it, about 5%, 5.5% that we saw year-on-year growth in your wages that came out in the labor data today. That is slower than overall CPI, and of course, notably, it's slower than the market expected. But is that the potential silver lining here, that we aren't getting this sort of wage price spiral that the Fed is worried about, and therefore we'll start to see inflation dialed back a little bit?
Yeah, the big question though is balance. I mean, that's obviously what the Fed is trying to achieve with the quote unquote softish landing, but how we get to that balance and when, I think, is a big question.
Well, I'll tell you, this is how we get to the balance.
All right.
Sparkling wine.
Our TV guy.
Can I come over there? I think
Jay,
Caroline's
can
sitting
I-
closer to you.
can I-
Maybe Caroline. You should get Caroline's.
All right, they're not going to see.
There you go.
I haven't drunk in a while. I need some.
You are all welcome.
There's plenty for
The
everyone.
team is
trust me.
back. It's so great. All right, we got to run. That's going to do it for our cross-platform coverage on radio, TV, and YouTube. Have a good weekend, everyone. We'll see you, our team, same time, same place on Monday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, can I just say that I've been looking forward to this part of our broadcast all day.
This is the.
I mean, I love being with our colleagues.
The fine food and fine wine portion of the program
It's
this
the
afternoon.
pursuit section of Business Week.
That's how we should do it.
I know.
It really is.
All right, well, we're going to talk about fine dining, what's going on in New York City. Chef and restaurateur Daniel Boulou, he is back with us. He's been so kind throughout the pandemic, talking about what's going on as an industry. So I'm curious what he has to say about who's coming back to his restaurant specifically.
Yeah, and how much food prices are.
He's opened up a new one.
Eating into things.
He's got a new one. So he's got to be pretty optimistic. All right, and we're going to also talk about fine wine in just a moment, too. First up, though, back to World and National News and Nancy Lyons. Hey, Nance.
Thanks, Carol. The Pentagon says more contracts are being signed every day with defense equipment companies to replace the weapons and ammunition being donated to Ukraine.
More than 500 Ukrainian soldiers are being trained at bases in Europe to use their U.S.-made equipment, Pentagon press officer John Kirby said. He was asked about Russian air attacks in Ukraine.
They know that the Ukrainians have effective air defense, and so you don't see them fly very long or very often inside Ukrainian airspace.
Kirby would not confirm reports that U.S. intelligence is helping Ukrainians with specific targeting, saying only that relevant and timely information is provided about Russian units, and Ukraine has been refining its own intelligence capabilities since 2014. In Washington, Irv Chapman, Bloomberg Radio.
Authorities have found an abandoned vehicle used by a female Alabama prison official, Vicki White, and escaped capital murder suspect, Casey White. They're not related. The SUV was reported abandoned a week ago and was identified last night, according to Lauderdale County Sheriff Rick Singleton.
Right now, we're trying to canvass the area for any witnesses, also trying to research, see if any stolen vehicles were reported in that area during that time.
Sheriff Singleton says the two are still considered armed and dangerous. A judge in Georgia has found Congresswoman Marjorie Taylor Greene can run for re-election, rejecting arguments from some voters who had challenged her eligibility over allegations she engaged in insurrection. But the decision will ultimately be up to Republican Secretary of State Brad Raffensperger. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Carol Masser, along with Tim Stenovic, here in our Interactive Brokers studio. This story, I saw this when it hit on the Bloomberg, and I was like, What's going on?
Yeah, well, there's always an economic story too, right? This is about the bird flu. It's a virus that's sweeping across the U.S. It's rapidly becoming the country's worst outbreak, having already killed over 37 million chickens and turkeys. More deaths, Carol, are expected through next month as farmers perform mass culls.
So under guidance of the federal government, farms must destroy entire commercial flocks if just one bird tests positive for the virus to stop the spread. That's leading to distressing scenes, as you would imagine, across rural America. In Iowa, millions of animals in vast barns are suffocated in high temps or with poisonous foam. I mean, how they have to do it is just a whole other story. So it's just problematic.
Yeah, just to put this into perspective, it's in Wisconsin, lines of dump trucks have taken days to collect masses of bird carcasses and pile them in unused fields. Neighbors live with the stench of the decaying birds as well. But it's also an economic story, Carol, because we talk about supply and demand when it comes to the poultry prices. Prices for such products are soaring to records, adding to the fastest pace of U.S. inflation in 4 decades. We're talking about deli meats, submarine sandwiches,
Egg prices
to whole birds
touched a
for the
record
holidays.
$2.90 a dozen in April in government data. Whole turkeys touched an all-time high of $1.47 a pound, according to Erner Barry. The last time bird flu hit the U.S. was back in 2015. Took the lives of about 50 million animals by the end of the season. Cost the federal government over $1 billion as it handles the destroying of all of these animals, which is necessary. But again, as we already see, we just talked about CPI, the print that we get next week. We'll look at core inflation, but we've already seen prices uptick. We talk about it. You go to the supermarket and you see it play out, and this is certainly going to add to that strain.
One thing that's been tough, says an executive at the Minnesota Turkey Growers Association, Michelle Corman, is that even with better biosecurity, the industry has failed to prevent the transmission from wild birds. So as a precaution, Carol, farmers are supposed to go through a laborious process of completely changing their clothing and shoes before entering barns.
All right, so just a peek into what's going on, certainly when it comes to our food sector.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The S&P 500 index ends the week at its lowest level in about a year. A fifth week of losses for the S&P, down this week by 0.2%. Volatility continued to dominate financial markets on this Jobs Friday. Stocks pushed lower, with the S&P today down 23 points, down 0.6%. The Dow down 98, a decline of 0.3%. Nasdaq down 173, a drop of 1.4%. 10-year down 24.30 seconds. 10-year yield 3.13%. Spot gold up 0.2%. 18.81 the ounce. West Texas Intermediate crude up 2.1%, 110.54 a barrel on WTI. Under Armour plunged 25.9% today after its earnings report showed it is struggling with supply chain issues and pandemic-related shutdowns in China. Recapping a move lower for the day and the week, with the S&P down 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenovic. We are live at Bloomberg headquarters in New York City in our interactive broker studio. Got to say, great way to wrap up our day and our week. In this last 45 minutes or so, we are focusing on fine dining and fine wines. First on the menu, dining in New York City. It's coming back. I got to say, I've been out to eat a few times after not for a very long time. And our next guest, well known to our Bloomberg Business Week audience and community. So great to have back with us, chef and restaurateur Daniel Boulou, owner of so many restaurants in New York City alone. He's around the world, Singapore, Dubai, you name it, also at sea. And he's joining us right now via Zoom in New York City. Danielle, so nice to have you here. How are you?
Thank you. Pleased to be with you, Carol and Tim. And I'm well. I'm opening a new restaurant today. So it's looking to some better days. And of course, I have the opportunity to have the fine dining restaurant that is the epitome of excellence and service and food and wine. And I enjoy also opening very casual, affordable, and soulful bistro. And the restaurant I'm opening today is called Le Gratin. Le Gratin is named after a soulful dish of my hometown in Lyon that I grew up with. Gratin de Cardon, Gratin Dauphinois. And it's kind of everybody knows that the gratin it's delicious, it has wonderful smell and wonderful taste, and often has a crust of cheese or something.
It sounds magical. Danielle, how did you think about the current restaurant environment and who's coming back and what they're looking for? I've talked to a lot of retail CEOs, and they're saying it's a much more casual society, although people are also starting to buy clothes to dress up. So tell us about this, how you were thinking about with this new restaurant, how you wanted to approach it.
Well, the good thing is I see all the spectrum of the market, because I even have retail store like Épicerie Boulou, Restaurant Daniel, Le Pavillon, which is a year old this month. And Daniel is celebrating his 29 years. And of course, Le Gratin being this new restaurant, as well as Bar Boulou, Boulou Sud, that are also casual, more approachable. I think we have been having a very good quarters, and we are entering to our second quarter with very strong, a lot of demand, a lot of private dining as well. People are going out. People are spending, but no more than before. Or if they do, it's because they really wanted to splurge on the missing things they really missed. But we see the lunch coming back. The Midtown business lunch are coming strong. But there's also that blend of business people and social people. People want to gather together and celebrate. Like today at Le Pavillon, we had 5 ladies who took the train from Westport, Connecticut, to have lunch at Le Pavillon, and they take the train back home. I thought that was very nice.
Sweet.
What about when it comes
to... But the city is buzzing. You feel it.
You do feel it. You certainly feel a difference with what we've seen over the last couple of years.
And the buildings, I am at One Vanderbilt, and the buildings are filling up more and more. And we see the activity inside. We see also in the amenity floors how many people come for lunch. as much as in the restaurant.
What about
Yeah.
when it comes to finding employees? Because we know that's been so difficult for many industries. How are you when it comes to staffing the restaurants?
I know. Well, that is, it is challenging, but we have a lot of young people coming to New York. A lot of people want to move back to New York. Move back or move to New York because they seize an opportunity to be part of this sort of new beginning again in New York. And we see a lot of young talent who maybe weren't thinking of it and now are engaging coming to New York. And we have also a lot of more people, I think, on the job market coming. So it is perfect? No, we are trying to be very careful. It's a balance between the shift we operate and the amount of staff we have in order to guarantee the quality of service and food.
Danielle, you, from what I understand, I mean, I think you first came to New York City in the 80s, was it? Is that correct?
Yes.
So you've seen a lot of cycles, and I think even after 9/11, right, people were really concerned about downtown New York and parts of New York, and just it came back, and we've seen so many different cycles in this wonderful grand city that is Manhattan and New York City. How would you put this cycle, and kind of, do you expect that we get back to kind of the grand levels that we saw pre-pandemic?
I think the worst part of the cycle is almost there. The bad part of this cycle is when the RRF came out and only distributed a third of restaurant compensation to help them restart their business. And more than 2/3, I would say 1.4 million restaurants never got anything. And so this forced a lot of closure. This forced to so many businesses to not be able to reopen the business they had. It was impossible. And also, you know, the last 3 years, 2.5 years, the uncalculated amount of loss that restaurant business had. And I hope the government will do something about this very unfair sort of distribution that happened in our business. 5 of my best friends got a nice check, and you know, I didn't get any, so it's okay. I still gonna be strong, maintaining my business, but still, it's very difficult. And I think I talk about the industry. So many people are still challenged. And some area in the country are maybe better than other, because Florida, I think, for the last year benefited better maybe than other part. But I think New York is strong and coming back strong. Of course, New York is relentlessly optimistic.
Well, we talk a lot about people moving out of New York, and we've also talked a lot about the way that jobs have changed here in terms of remote and people not having to necessarily live in New York City to work here. Do you think New York City ever comes back to levels, at least when it comes to employment, when it comes to the service industry that we saw pre-pandemic?
Of course it will, because I think the transition of the home office situation will still last a couple of years until there is really a settlement of balance between people's life and business necessity. But and I think there is a lot of I mean, in our business, the hospitality, if someone say I want to work from home, it's not gonna work. You're gonna have nobody serving you a meal or cooking you a meal. So
well, you know, Tim asked earlier about labor and whether or not you're, you know, finding everybody you need. There are so many strains and stresses still on this industry, and I think about labor certainly and labor costs, or just finding the workers you need, but also, Danielle, about just higher food costs. Are you able to pass all of that along to your customers?
We try to be very, very cautious on raising price, as much as we get hit every day with a raise of something. I mean, if it's not the lamb, it's the asparagus. If it's not the asparagus, it's the artichokes. Of course, artichokes come from California. They have to travel all the way to New York. And so we get very creative and try to really work with our local suppliers as much as possible. We try to be, I always been very seasonal in what I do. And I think seasonality helps in maintaining cost control. But it's question of being very careful and yet not deprive the guest from excellence and quality. So creativity is very important. Taste is very important. And, you know, you give me $5, I'll make you a wonderful meal. You give me $50, I'll give you a wonderful meal too. So it's just a question of the approach of what we do with what ingredient we have and how we can interpret that.
Can you ascribe some sort of figure to how much you've seen prices of your inputs go up, how much you've seen food costs go up in the last year? What percentage-wise is that?
I would say that the food cost in general went up by 30% in average, between some went higher and some lower, some 10, 15%, but I would say 25 to 30%, but menu went only up 10%, maybe 10 or 15, no more. And the hardest thing also, on the menu, we also have to think about service. So when you pay $100 for a meal, you still have to pay 20% of that for service, plus another 8% if you're in New York City for tax or more. It's 75.
So Daniel, your new restaurant, Le Gratin. So tell me, if I come for dinner, what will I get?
You will get some wonderful seasonal appetizers, seafood, a selection of seafood, wonderful appetizer with vegetable, because I think even if it's a bistro, it can be simple. The meaning of a bouchon and a bistro is that the food is of great quality ingredient, good technique, and simple preparation. And so there's a salad of haricot vert with some shaving of foie gras on it, but there's also we have a watercress soup with smoked trout. And then I do also a pike quenelle, which a quenelle is a dumpling of pike that is in a bechamel, light, not creamy, but milky bechamel with mushroom and Gruyere cheese on top. And that's gratiné, which you need bake in the oven until it puff and get crusty.
Oh my God.
That's delicious. People love it.
Next time we do this at the restaurant.
Totally. 20 seconds left. What do I get for dessert?
We have basically everything from seafood to meat to vegetable to, and I think it's, a bistro is a place you can go once a week because it's affordable, because it's fun, the wines are affordable, the food is affordable, and it's healthy and yet nourishing.
We have to leave it there. So great to check in with you once again, and good luck on the new restaurant, and really appreciate all the time you gave us today. Thank you so much. Daniel Boulud, of course, you know him well, and of course, he's opening up this new restaurant, Le Gratin, in the Beekman. It's in downtown Manhattan. So to me, that alone is just showing some optimism, right? Of being really, that's spending to expand the industry.
I was shocked to hear food prices have gone up 30%, but he's eating a lot of that because passing about 10% or to 15%
in the
of
menu
that
prices,
along
right?
with the menus. Yeah,
that's kind of rough when we talk about the pressure on margins. Our thanks to Danielle Boulud. Right now, let's get back to Charlie Pellet with a check on how the markets ended up on this Friday.
Well, I'll tell you, bear was on the menu today on Wall Street. The Dow, the S&P, NASDAQ all declined today. Losses on the day and losses on the week. 5 in a row, if you're keeping track. Yes, we are here at Bloomberg. S&P having its longest weekly losing streak in a decade this week, down another 0.2%. Volatility continued to dominate financial markets, stocks pushing lower as the latest U.S. jobs data cemented expectations that the Federal Reserve will remain on its rate hike path to combat stubbornly high inflation. Reaction to this morning's jobs report from White House economic advisor Heather Boucher.
This is good news for the American people. Another strong jobs report. And the president, since he took office, we've seen 8.3 million jobs added in the U.S. economy, and today's report shows that is continuing. The unemployment rate held steady at 3.6%, and we continue to see nominal wage increases.
So today, a losing day for the U.S. stock market. The Dow was down 98 points, down 0.3%. S&P tumbled 23, down 0.6. NASDAQ down 173, a drop of 1.4%. 10-year yield this jobs Friday, 3.13%. Well, as for what else is on the minds of investors, Steve Brown is senior portfolio manager at American Century Investments. He was our guest right here on Bloomberg Business Week.
The Fed's going to continue to raise rates until they get the results they want. And I think one of the after effects of their rate hikes will be a slowdown in GDP in the second half of the year in the United States, as well as a reduction in earnings estimates for many companies within the S&P 500.
Sources tell Bloomberg Peloton Interactive is seeking to sell a stake of about 20% as part of a push to turn around the embattled fitness company. Today we saw Peloton shares slump 7.7%. Under Armour plunged after its earnings report showed it is struggling with supply chain issues and pandemic-related shutdowns in China. CEO Patrick Frisk has been focused on improving operations at Under Armour after global supply chain disruptions made it difficult to secure enough inventory to meet customer demand. Under Armour today down 25.9%. Again, the 10-year yield 3.13%. Spot gold up 0.3%, up $5.21 the ounce to $18.82. West Texas Intermediate crude up 2%, $110.40 a barrel. Again, recapping a losing week for the U.S. stock market. Down Friday, S&P fell 23 points today, down by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we talked about that this last 45 minutes and this last half hour, it was all about
the finer things in life, Carol.
It's the pursuit section of Bloomberg Business Week. We just talked fine dining with Danielle Boulou, and now we're going to talk about fine wine. So delighted to have with us, and I got to say there's a connection to this weekend's Miami Grand Prix, which also happens to be the cover story of Bloomberg Business Week about how Formula One racing finally making some inroads here in the United States. So
very pleased to have with us Matteo Lunelli, President and CEO of Ferrari Trento Winery, also President of the Alta Gamma Foundation, joining us via Zoom from Miami. Matteo, how are you?
I'm fine, thank you. It's my pleasure to be here. Thanks for the invitation.
Well, thank you so much for joining us. First of all, tell us about what things are like in Miami right now with the city's first F1 race happening this weekend.
You know, there is a lot of expectation. This is going to be a fantastic weekend. I think, I believe Miami is really a sparkling city. And this event is very much expected. There has been, all tickets are sold. There is no space left. A lot of people that came to Miami, huge amount of events around the city. So a lot of excitement for this Formula One event, which is really expected to be an amazing, not only an amazing sporting event, but also a great lifestyle event for the city.
Well, the current issue of Bloomberg Business Week has a deep dive into the sport of F1 and the changes that it's undergone under new ownership in the last few years. And I'm wondering if you can tell us what you make of sort of the Miami F1 connection right now. Does it feel like a city that's ready for F1?
I certainly believe so. It is, Formula One is really growing strongly in the United States. That's our perception. Obviously, we are an Italian company. In Italy, Formula One has been always extremely popular. What I'm seeing is that this is happening in the United States. The popularity of Formula One is growing dramatically. That's obviously also linked to the fact that a U.S. company, Liberty Media, is owning Formula One now. The new Miami GP, in addition to the Austin Grand Prix, I think obviously helps to the growth of Formula One in the United States. And there has been a huge investment to build this amazing infrastructure here in Miami. And next year, we will also have the Las Vegas Grand Prix, which is expected to be extraordinary. So it is certainly a moment of strong growth for Formula One in the United States, which for us as Ferrari Trento is also a great opportunity because for us, the United States is a strategic market where we think we have a lot of room to grow in the future.
So talk to us about your heritage, the history of the winery. Founded back in 1902, been around for a long time. Tell us a little bit about the history of it.
Yeah, the Ferrari Trento Winery was founded in 1902, as you mentioned, so we are 120 years old. We are doing this year this important anniversary. And everything started from a dream of a man called Giulio Ferrari. So the name Ferrari comes from the name of our founder, Giulio. And he has been an incredible pioneer for the world of Italian wine. First of all, he understood the vocation of the Trentino land to produce outstanding sparkling wine. And then, for example, he's also been the first one to bring Chardonnay in Italy. Giulio Ferrari studied enology in Italy, but then he specialized in Montpellier at the end of the 19th century. And then he had the opportunity to spend some time in the region of Champagne, which is where he learned how to make bottle fermented sparkling wine, which we call the traditional method or metodo classico, and in France it's called méthode champenoise. So coming back to his own land of Trentino, everything started from the dream to create an amazing sparkling wine in his own land. And he started a very small production in 1902 in his own palace, which was in Trento, our hometown. And he ran the winery for 50 years, loyal to this dream and to this idea. After the Second World War, he had no children, so he had to find somebody who could continue his vision. And between many pretenders who wanted to acquire Ferrari Trento Winery, he chose my grandfather as his successor. So in 1952, my grandfather, went to the banks to get a lot of debt in order to acquire the winery. And in 1952 starts the history of Ferrari Trento Winery under the leadership of my family. I represent now the third generation of my family in the company. The winery has grown a lot, but I think we always remain loyal to the principle of the founder. And in over a century of history, Ferrari has really become the toast of Italy par excellence. We are the leading producer of luxury sparkling wine in Italy. And, it's certainly the toast of the most important events in the world of Italian fashion institutions since very long time. And now more and more internationally, and certainly this Formula One of which we are the official toast is certainly one of, a very important platform for us.
Matteo, I have to say, we just have about 40 seconds, and then we're going to take a break and come back and talk some more. But on our planning call, we talked about, right, it used to be like whoever wins, right? In an F1, you usually toast them with champagne, but they're actually going to be toasted with your sparkling wine.
Yeah, it's the first time that an Italian brand, that a non-French brand actually, comes to this to the podium of Formula One. That's why we used to say that we brought a touch of Italian lifestyle on the podium of Formula One. So it's a great honor. So all the champions celebrate in all the GPs of Formula One with our Ferrari Trento sparkling wines. We have the beautiful Jeroboam bottles for 3 liters that are certainly a joyful moment for the celebration of the pilots. And then, Ferrari served in all the hospitality areas in the GPs. So it's really part of the experience for whoever loves this sport and is enjoying a great weekend of sports and lifestyle.
Matteo, sit tight for a second. We're going to come back in just a moment. We're talking with Matteo Lunelli. He's President and Chief Executive Officer of Ferrari Trento Winery, President of the Alta Gamma Foundation. I want to talk to him also about that and what he's doing to help bring Italy to the rest of the world.
First, though, let's get a check of the latest world in national news. Standing by is Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden is visiting Southern Ohio today to tour manufacturing facilities and to speak on his top economic priority, lowering the rising costs for working families brought on by high inflation. He says the country needs to focus on creating and strengthening American products and turn away from importing from outside the U.S.
We know that one of the best ways to fight inflation is to bring prices down, is to strengthen the resilience of our supply chains. And that includes making more things here in America, at home, from top to bottom.
Biden today also touted the fact by October 1st he will have reduced the deficit by $1.5 trillion. There's new evidence Republicans could face a political risk if they push for a ban on abortion with no exceptions. Bloomberg's Nathan Hager reports.
That evidence is a newly released poll from the Pew Research Center. It finds 73% of American adults favor an exception for abortions if a mother's life or health are at risk. 69% say there should be an exception for pregnancies caused by rape. Majorities of Republican and Republican-leaning voters feel the same way. 62% of them support a mother's health exception. 56% say there should be one for rape. This poll was taken in March. That was after the Supreme Court heard arguments on a Mississippi abortion law, but before a draft ruling on the case was leaked. In Washington, I'm Nathan Hager, Bloomberg Radio.
A gas leak is suspected in today's powerful explosion that rocked the 5-star Saratoga Hotel in Havana, destroying the facade of the building and killing at least 8. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser, Tim Stanovic here on Bloomberg Business Week. We're talking with Matteo Lunelli, President and CEO of Ferrari Trento Winery. And Matteo, we just have about a minute and a half, and then we'll do some more news, and then we'll come back and continue. But I do wonder, we're talking about your sparkling wines. How much demand have you seen in terms of growth as of late?
We have seen a very strong growth. The brand is probably performing very well in the United States and worldwide. We have seen, getting out of the pandemic also, we have seen that, people is really willing to getting together and is willing to socialize. And sparkling wine is about the joy of life. It's really about enjoying staying together. So there is, I think, it's a very good moment for sparkling wines. And, as I said, Ferrari is performing extremely well, thanks also to this partnership with Formula One that is increasing our brand awareness worldwide.
Did you see any decline during the depths of the pandemic in March, April, May of 2020?
Yes. Obviously, in 2020, the market was impacted. Just consider that we have a strong partnership with all the on-premise business, so restaurants, hotels, and bars. Unfortunately, that has been a very, that sector has been strongly impacted. So in 2020, there was a drop. We had a drop of 15%, which was much less than what I feared at the beginning. But then because it was partially compensated by the consumption at home and by online sales. But 2021 has been a very strong growth, year of strong growth, and we recovered completely what we lost in 2020, closing 2021 above 2019 level, which was an absolute record.
All right, we're going to come back to you in just a moment. We are talking with Matteo Lunelli. He's president and chief executive officer of Ferrari Trento Winery. He's also president of the Alta Gamma Foundation, and their members include everybody in fashion, design, jewelry, food, hospitality, the auto world, yachts, wellness. I mean, it's really like a Bloomberg Pursuit section, if you will. And it's all about increasing the competitiveness of the industry and contribute to Italy's economic growth. So I'm curious what he has to say about that as well.
We'll also talk to him about supply chain in addition to that.
Yeah, see what's happening. This is Bloomberg.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 6 losing weeks in a row for the Dow Jones Industrial Average, 5 in a row for both the S&P and NASDAQ. A down Friday, a jobs Friday as volatility continued to dominate financial markets. S&P today down 23, a drop of 0.6%. The Dow down today by 98 points, down 0.3. NASDAQ down 173, a decline there of 1.4%, extending its losses for 2022 now to 22.3%. Bottom line here, stocks at the lowest level in a year. We have got the 10-year yield 3.13%. Gold up 0.3% today, $18.83 the ounce. West Texas Intermediate crude up 1.8%, $110.22 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stenovic, we are here at Bloomberg headquarters in New York City. We're talking with Matteo Lunelli, President and CEO of Ferrari Trento Winery, as we mentioned, founded in 1902. He's also CEO of the Italian beverage group Lunelli Group and president of the Alta Gamma Foundation, still with us via Zoom from Miami. In terms of running the business, supply chains, labor, how are things going?
Yeah, there are some issues in the supply chain. Looking at my sector in the wine sector, for example, we are struggling, for example, in securing the supply of glass bottles and some of the packaging materials. So there are issues, obviously, and rising cost for that. Transport is also another issue. The cost of transport is rising. So there is certainly, inflation on the horizon in all the sectors. Then, as you mentioned, I'm president of Fondazione Alta Gamma, so I speak to a lot of our members, which are in different sector like design, fashion, automotive. Each one of the sector has specific issues, and certainly in some of the supply chains, there are problems to be faced. Even if, as I said, we came out of the pandemic with a strong rebound in 2021, which was in general stronger than expected. Some sector already are above 2019 level. I spoke about our winery and the sparkling wine market. Design it's been very strong, with a strong attention to home and to everybody has been very much willing to invest in home design. Yachting has been performing extremely well. Fashion, I would say, in the middle. It recovered, but not yet in 2021 to the level of 2019. And the sector which suffered the most is hospitality and everything linked to experience. And touristic flows are still struggling a little bit. But for example, United States is certainly a market. It's probably one of the strongest market, which has performed better than most of it. Europe has been slower in the recovery, especially because in the luxury good consumption in Europe, we are missing a lot of the touristic flows from the past.
Matteo, we want to get into some of the wines that your team has sent over, but I do curious, do you guys talk a lot about recession? We certainly are watching Europe. We're watching in the U.S. Do you think about that a lot in terms of what's going on in the global economy, or what's some perspective you can share with us on that?
As a wine producer, and at Ferrari Trento, we are just looking at a very positive environment. So in general, things are going extremely well. In a sense, we have a problem that we have less bottle than what the market is asking for, because Ferrari Trento needs years of aging on the lease, so we cannot have all the bottles that the market is asking for. But in general terms, certainly yes, there are some issues and some problems on the horizons. We need to see if the inflation will hurt consumer confidence. Now, in the high end, so in the luxury goods sector, in the high end, generally speaking, inflation has less of an impact. Most of the companies have to rise price, and in the high end, normally consumers are less sensitive to that. Right. But certainly there is a risk that inflation can hurt consumer confidence in the future.
Let's talk about some of the wines that you sent to our team. We've got the F1 limited edition. We've got a rosé here as well. What sets these sparkling wines apart from one another?
First of all the Ferrari Trento Doc sparkling wine are bottle fermented sparkling wines made with grapes cultivated on the slope of the Trentino Mountains. We are a mountain sparkling wine, and Trentino is a beautiful region, famous, for example, for the Dolomites. We are in the northeast of Italy, and on the slope of the Trentino Mountains, there is a very unique microclimate that gives the style to our wines. During the day, our vineyards on the mountains are kissed by the sun. During the night, the cold air comes down from the top of the mountains. And this shifting temperature between day and night, which is quite extreme, helps to get amazing grape with well-balanced acidity and aromatic maturation that is crucial to have this fine and elegant sparkling wines. So this is our terroir, and Trentino is what makes our wine unique. Then in the range of the Ferraris, we have Ferrari Brut, which is a Blanc de Blanc, so only Chardonnay. The Rosé is a blend of Chardonnay and Pinot Noir. You got, Chardonnay in Trentino has beautiful notes of white peach, golden apple, white flowers. On the Rosé, the Pinot Noir brings a touch of red berries, a little bit more structure. Two different wines with a similar style, which is the style of our house. And the limited edition that you're mentioning is something we are very happy about because it has been very successful. It's a limited edition that we created and we dedicated to some iconic GPs. So, for example, the Monza GP in Italy, Silverstone in the UK. Now we just came out with this new Miami limited edition, which has been, which saw a great demand, not only in Miami, but in the States and also in Europe. I think first thing, because this Miami GP is very much expected and has a lot of expectation and is expected to be one of the greatest events in the world of Formula One this year.
Right.
And then because Miami is a city that is a symbol of joy of life.
I was surprised that there weren't like some pastel colors, in the box to talk about Miami. How should we drink a sparkling wine? I think about our audience. We often talk with vineyards and wineries and get some education for our audience who knows a lot about wine. But how should we drink? First of all, a sparkling wine needs to be cold, right?
Absolutely, it needs to be cold. So put it in the refrigerator. Usually the ice bucket is the house, is the most typical and traditional house place to put a nice bottle of sparkling wine. But just put it in the fridge and have it cold. I always say that it's better a little bit colder so that at least you can wait and let it warm in the glass than the opposite. Not too much cold, because otherwise you cannot perceive the flavors. In Ferrari Trento Doc, you have these nice aromatic flavors that you have to enjoy. I would suggest not too much of a narrow flute. Historically, sparkling wine was consumed in the traditional flute, which is very narrow. I normally like to drink the Ferrari in a larger glass. You can use a white wine glass sometimes, and then Ferrari Trento Doc and our sparkling wines are very flexible in pairing with food. So certainly is a wine that you can have as an aperitif. You can pair with some Parmesan cheese, olives, right, or a little bit of ham. But it's also a food-friendly wine. So if you ask me how to drink it, have a nice, pair it with food, because a sparkling wine can go throughout the meal.
Well, it sounds like a perfect thing. A way to wrap up what's been a crazy volatile week, we know, in the financial markets. I know you guys are looking forward to F1 Miami, and it should be a lot of fun. And we'll be looking for the winner, who will be sprayed with your sparkling wine. Matteo, thank you so much. Really appreciate the time. Matteo Lunelli. He's president and CEO at Ferraro Trenti Winery and CEO of the Italian beverage group Lunelli Group, also president of the Alta Gamma Foundation. Gotta say, crazy week, and yet overall not too bad on those major equity averages.
Yeah, surprising to see that. I don't know about you, Carol, but I'm ready to go throw some of this sparkling wine on ice.
Heading for my fridge as we speak. Folks, for the Bloomberg Business Week team, have a good and safe weekend.